Hasan, I have a great idea.
Yeah.
Tomorrow I'm going to come and pitch it to you. What do you think is the most common reason that you would reject me and I will never hear afterward?
Ideas are worthless. So that's the first thing. So don't pitch me an idea. Pitch me a thing that you've worked on. Tam, Som, Sam, all of that is made up numbers. So like it really doesn't matter.
My guest today is Hasan Haidar, founder and managing partner of Plus VC. Over the past 15 years, he invested in more than 250 startups and helped back some of the region's biggest success stories. In this episode, we talk about why he believes great founders create their own markets, why ideas are worthless without execution, and the hidden patterns he uses to spot extraordinary entrepreneurs long before the rest of the world does. You invested one of my favorite companies, and he's a friend of the show. He's been on the podcast before. Is Calo. It's a meal delivery company. A lot of people look at the same company and did not invest, but you chose to invest. What did you see that others missed?
So honestly, like it wasn't an investment in Calo as a concept, a meal delivery company or anything like that. It's not like I saw, oh, this is going to be big. Like I couldn't look into the future. But what I did see was Ahmed. So I invested in Ahmed, not anything else. So Ahmed's story, of course, I'm sure if people have seen the podcast, and have seen his story, he had this own little photo printing sort of thing that he did when he was in university. He attended a bunch of like startup weekends. So from those days, while he was still like a teenager, I was following this guy's sort of exploits. And then when he finally started something that looked like it could scale, I invested in it. And that wasn't Calo, it was actually Mela'ib. And so I invested in Mela'ib when Ahmed was like, okay, yeah, I think this could scale. And then when he left Mela'ib and decided to do Calo, I was like, all right, this one's going to be the one that works. So it's basically, I invest in the person, and that's really the core focus of what I do as a VC, is just find people that can execute and just like see the world in a certain way and have the ability to get the world to be that way. So that's really what I'm looking for.
So it's not the market, the Tam, Sam, Som, is not just the founder.
Yeah, the Tam, Som, Sam, all of that is made up numbers. So like it really doesn't matter. I mean, if you're looking for a reason to say no, you can use those numbers. But like great companies and great founders create their own Tam and Som and all these sort of things. So what you look at as an existing market isn't necessarily the market that is going to be there after these founders have been able to execute and build. So yeah, all of that is worthless. Like we invest in people, and that's really the thing.
Again, there's another company which is one of my favorite as well. It's an online shop, Floward. Yeah. Now it's one of the biggest in the region. What made you invest? Again, a flower shop usually is not like very attractive for VC to invest.
Again, it was the founders. Abdulaziz Al-Lughani was one of the founders of Talabat. He said, Hasan, I'm starting a new company. That's all he had to say, literally, for me to be like, all right, I'm in. Like, he didn't even have to tell me what he was working on. But that's the thing. Like, Abdulaziz had a proven track record. He had built Talabat. He exited it. He understood what it took to actually build a company. And with Floward, he had learned a lot of things with Talabat that he was going to use to make sure the Floward succeeds. And that's kind of what he did. And so again, just back the right people, and then the concepts, the ideas, the TAM, the market, all these sort of things, they work themselves out.
And even when I look at your portfolio investment, I mean, it's not very domain specific. You just look for the right people.
That's it. So the thing is, a lot of people are, when they enter VC, they think they have to act smart, and they're like, oh, let's look at all of these things related to due diligence. But at pre-seed seed, where we sort of invest, all of that isn't really meaningful. Even if the company's been around for less than a year, those numbers aren't really indicative of anything. So even the only thing that you're looking at when you're looking at that is that, yeah, actually the founders have been able to build a team, come together as a founding team. Great, that's a good tick. They've been able to figure out a product that kind of they've made it exist, and there's people that are willing to use it or pay for it. And those are 2 ticks. Like those are kind of enough ticks for me to be like, yeah, they have an ability to execute and get things done. So like when people come into VC, they try to act fancy, but the thing is, it's not really fancy. It's just find the right people and give them the resources and the ability and a little bit of advice and guidance along the way, just to make sure they don't make common mistakes to build what they have in mind. And so, yeah, we don't follow trends. We don't be like, oh, AI is the hot thing. Let's go invest in AI. No, it's like, hey, we've invested in AI startups before it was the hot thing. I used to actually actively avoid saying AI because it's too early. Everyone, as I used to be like, it's a machine learning startup. It's not not AI. It's just machine learning and then eventually, actually, this AI thing, we've got a bunch of deals that are within the new hot trend. So don't try not to follow trends as well as another thing. Like by the time a trend is established and things are really cool and whatever, the opportunity to invest in that's probably mostly been taken over already.
You've seen thousands of pitches, but by now, thousand startup pitches. What are the signals like in the first 10 minutes you think like, you know what, this founder might actually build something extraordinary?
They've already started to do stuff. So they're not, so there's a difference in language. There's a difference in approach. It's not like we are going to do this. It's like, hey, this is our ultimate objective, but what we've done so far is X, Y, and Z. And so there's a difference in the way that founders look at the world. Some are waiting for something to happen to them. They're waiting to raise funding to do X, Y, Z. They're waiting for this to happen. And those typically founders are not actually going to be achieving much because anytime you look at them, they're waiting for something else. And so not really the best sort of characteristics. But if within the first 5 minutes, the founder has told me, this is what we're doing, this is what we've done so far to prove that this is a market that makes sense, this is what we've done X, Y, Z, and now with this resources, we're going to do this, and this. And then it's very clear that they are not going to let anything stop them from executing on their vision and getting it done.
I spoke with Ahmed when he first pitched Calo. He was like, Mahmoud, we hired a kitchen, we have people delivery, we already have the website on, I was like, Mahmoud, we're going with VC money or we're not with VC money, we were going.
That's basically it.
Okay.
And so he started cooking his first meals, I think, in his apartment or something. My wife was one of the guinea pigs, by the way.
Oh, really?
Yeah, the food was horrible at the beginning. Now it's amazing.
It is really good.
I think the feedback helped it make the food really good. But that's the thing. It was either like, am I going to be part of his success story or not? That was a binary thing that I had to answer. I was like, yeah, I mean, I've backed him so far and I know I want to be part of the story. And so tiny part of the story. He's achieved everything himself. But
you're one of the first institutional investors.
First investor, yeah.
First investor
that said, yeah, we're in, let's do it.
But now, after seeing thousands of companies and you invested a lot, some of them did really well and some of them disappeared. What really separates those category leaders from the companies that eventually disappear?
Again, it's just the ability to execute. That's really the thing. And of course, having the resources to do that also helps quite a lot. So founders that are able to build significant things with whatever resources they can put their hands on, that's really the thing that we're looking at. And so that's the signs. Those are the signals that I'm looking for. I'm looking for these founders that fit in with that sort of, everyone has matching and things like that. I've seen successes, I've seen failures, and I know that, in order to see success, I need a founder that's going to achieve something, whether they have resources or not, whether the world is against them or not. They're going to actually go and build and achieve and execute. And most of the time that doesn't work, by the way. Like, we know most deals, even if that works, even if that is the right founder, they just might not have the resources to pull off what they need to pull off. Sometimes it's just that. It's just like, it is a great founder with a really interesting concept and the market that's waiting for it, but they just no one else really believes in it or sees it. And sometimes we end up being the first check and the only check in a deal like that. And it's kind of depressing sometimes. We're like, why isn't anyone else seeing how amazing this person is? So that's something that's a bit, it's sad sometimes, right? Like we're like, everything was great, but just no one else saw it. And so,
but we spoke a lot about founders, which I agree with you, very important. But what about like other VCs would say that market timing is even more important than founder as well?
I think it's a lot of VCs make up stuff after the fact. So I think the thing that I'm really aware of now is that we've gone through a shift as an ecosystem right now. So we had the first generation of VCs 2016, 17. Actually, they're not the first. They were older ones, but the first, like when the ecosystem started opening up around 16, 17, 18, we saw a bunch of VCs come into the market. And at that time, the partners themselves were going to these events. They were interacting with founders. And so there was no filter. It was a founder pitching to a partner at wherever. So there wasn't, but now what we're seeing in the market a lot more is as the VCs have grown and become bigger and more institutionalized, you have a lot of analysts and associates and principals. And sometimes really great deals don't make it up to the partners like they used to before. So it's become a little different to sort of navigate how the ecosystem looks. And the other thing is a lot of the VCs have had really great successes, like in the region. It's been really good. Most of the VCs have had amazing deals that they've invested in early. And so they've started looking at pattern matching similar to those deals. And they've started to ignore the fact that they should still be taking the same level of risk as they were before by investing in the next type of that deal. So like great founders, similar to what they invested in before, but now. So I think it's an evolution that's happening in the market that I'm not necessarily a fan of. And so I think we need to go back to the time when it was still very nascent and the partners were taking these risks on little interesting deals like Calo and stuff.
The thing about like about Plus VC is the majority of VC money is concentrated in the region is UAE or Saudi Arabia, and that's it. But again, you look other markets. I mean, Calo in Bahrain, Floward in Kuwait. Why do you look in other Gulf countries? We have the UAE is enough.
There's great founders in every market. And so that's really the thing that I know that for a fact because I did those great deals and those were from smaller markets. So if you ignore smaller markets, you're kind of like saying that there aren't great founders everywhere, but there are great founders everywhere. And even in small markets, they're perfect testing grounds. And if they're able to expand within a year or two into a big market like the UAE or Saudi, that's an amazing opportunity because those deals usually are priced much lower than deals in the UAE and Saudi as well. So valuations also matter at entry. And so deals in most other markets are priced lower than these two big markets. And so yeah, it's one of our key things. We're looking for the best opportunities wherever they are in the region. We're active in Kuwait, we're active in Qatar, we're active in Bahrain, Oman, with Tunis, Morocco, Jordan, Lebanon, everywhere. We'll look for deals. We did a deal in Iraq as well. So we're actually pretty...
No one is doing deals in Iraq.
We did a deal in Iraq, so it's doing super well. So we're pretty happy to be the first and only believers in markets. And that's kind of like been our thing. Like, that's what I like. I want to go and find these sort of amazing people wherever they are and give them the first support that they need to get there.
There's another thing that you guys, that's very contrarian, which is sometimes you don't really take a board in the startups. So like, no, just join our Plus community. Why is that?
I don't want to take a board seat on a seed stage deal.
Everybody want to take a board seat. Don't you want power?
No, board seats are the worst at the early stages. No, it's because, okay, what am I taking a board seat for?
You can tell the founder what to do.
But I don't want to tell the founder what to do.
You just want to hire good founders.
I just want to invest in a great person who knows what they're doing. Okay. And then when he needs any guidance, he'll reach out and be like, hey, listen, we need to do XYZ. Do you have any guidance, any support, any contacts? And we'll help, like whatever we can. So we don't have to wait for a board meeting for them to present to us formally, we need XYZ. No, we're on WhatsApp with them. Like, send me a WhatsApp. Okay, sure, I can make that introduction. Or I can, by the way, you probably should avoid this because XYZ, I've seen it happen before and these things don't work out. Or yeah, you should try this because we've seen this work before. So, investing in 300 startups now. I have a little bit of experience of things that have worked and things that haven't worked. And so my job is not to tell the founders what to do. My job as a VC is to find the right founders, invest in them and support them. That's my job. I'm
going to clip this and send it to most of my VC friends. Because again, I love all my VC friends, but if we go to their LinkedIn, they're a board member into like a 20 company. And you've been here in the region, one of the oldest, by the way. I mean, we're going to talk, you started like 500 years as well. Yeah. And barely any.
I don't like board seats. So I'll take a board seat if it's there to protect the founders. So like if it's there, like they're like, hey, listen, we need someone on the board that's on our side against the other VCs. I usually take that board seat. So I'll do that, but I don't take that very often. I'll take it if they really need it to have like a local or something, whatever. But I really try to avoid board seats at the early stages. And it's not our job. Like as pre-seed seed stage, our job is to get them to Series A. At Series A, okay, there's a formal board, makes more sense. There's millions of dollars at play. Series A, B stuff, fine. Like go ahead, take board seats. Late stage VCs, they should definitely take board seats. But pre-seed seed, it's like meaningless. Like the startup still is like goo. They haven't established themselves yet. They don't really know which direction they're going on. So if they come and present, this is our plan this year, like within a month, that plan's like out the window already. Like it doesn't matter. And so we need to give them flexibility to figure out what needs to be figured out at the early stages. So yeah, my job is not to sit on boards and tell founders what to do. It's to find good people and then be like, yeah, what do you need help with?
Amen. But there is some of the investment that Plus VC did not go well.
Yeah, a lot of them. Yeah.
Now reflecting on this, what do you think is why the reason that some startups die and the founders don't realize it until it's too late? What are the most common reasons?
So startups usually die from self-inflicted wounds, basically, right? So there's a lot of things that they have maybe not paid attention to, haven't focused on customer acquisition enough or whatever. There's 1,000 reasons why startups die. Like it's not any one specific reason, but usually it's they just haven't achieved what they needed to achieve in order to raise their next round of financing. And so that's really the thing. And like that's a moving scale. So sometimes they're just idiots too, but like thankfully not too many in our portfolio. Sometimes it's a hard thing to build a startup. It's not an easy thing. It's not like it's nice and fancy and everyone's talking about it now, but like 15, 16 years ago, when you go and you like, say for instance, you're trying to propose to someone and the father asks, what are you doing? It's like, oh, I have a startup. They'll kick you out of the house. But now it's kind of become a more normal thing, but it is a hard thing to build your own company and get it from zero to a position where you're doing hundreds of millions of dollars and hundreds of people and stuff. So I think that's something that people have started to forget. And it's a hard thing. So there's a lot of reasons why startups fail.
What about founder disagreements? This is something that you guys interfere or not really?
We don't we don't get too involved in that, but we try to encourage them to figure things out. When we invest, we usually ask for founders agreements. So if anything happens and one of them has to leave, at least the vesting and everything is clear so that there's no disagreements about that. But in general, yeah, it's tricky to get involved on any one side of that situation. So we're there to guide both of them. We'll help if they ask our help to try to reconcile, but yeah, it's not something that we can force them to be friends again.
There is any traits that founders that have that sounds positive, but it's actually a red flag for investors? Maybe too charismatic or too visionary? Oh no, not really.
I mean, if he's visionary with no substance, yeah, obviously. If it's I want to be the next Elon Musk. Okay, what's step one to get there? No. What's step one?
Stanford graduate is a good flag or red flag, or doesn't matter?
It doesn't matter, honestly.
It doesn't matter.
No, it doesn't matter. I've learned that. University background, where they worked before, all these sort of things, they're not indications of success or failure. Not in our region, maybe in other markets, but not here. We have successes that went to random universities in the region, and we have failures that went to Harvard. So,
and I know that one of the people that I spoke with, it was Mahmoud, he really does not like future financial projections.
Who,
Yes, don't go and try to pitch him financial projection. He knows that all of it all bullshit. I mean, he don't believe all of this.
Yeah, it's all made up. It's great. It's sure, show me how you imagine the world's going to be. But the moment you step foot out the door, it's nothing like that. So financial projections for an early stage startup, pre-seed, seed, waste of time. The worst thing is when someone's new to the ecosystem, maybe they worked somewhere else in finance, they ask a startup that's just getting started. They've been around for 3 months. Show me your next 5 years financial projection. Like they don't even know next month what they're going to be doing. So like that's one of the sure ways that I identify that an investor is new to the scene is when they ask for that 5 years projection from a pre-seed seed startup. Like it's an exercise in creative writing. That's what it is.
Very good point. There was one lady who came to me for help, and she wanted me my help to work on financial projection for the next 3 years. And her startup was like still 3 months. I was like, Habibi, still you don't know
You don't know
what you
anything.
don't know.
Yeah, you don't know anything at that stage. Tell me how you're gonna get to the end of the year or next year. That's enough for me. It's like that's like
She took 3 months to create it.
it's a waste of time.
It
Build
was
the
so
company.
many yes, it was so much details. I was like, dude.
See, that's like paralysis. Like people overthinking what they need to do. You don't need to be working on that. Go out, get a customer, get them to use your product. That's it.
The creator of YC, he always says like spending time with events and anything that's not building the product or being with the customer is a waste of time.
In our region, maybe it's a little different. So events, to a certain extent, they'll help you with the fundraising part of the story. They'll help you with the brand visibility and things like that. So I don't necessarily say don't go to events, but after a certain point, yeah, stop going to events. Like at the beginning, go build your network, get people to know who you are. But then after a while, yeah, it's not the best use of your time. There's startup founders that not really startup founders that go from one competition to another competition to another competition, to another, or one accelerator to another accelerator.
Start to know them by name.
And you're like, dude, like, come on, what have you actually built since the last competition 3 months ago? Nothing. It's the same deck. And so, yes, in those situations, probably don't like winning a competition doesn't mean you're going to build a great company.
Hasan, I have a great idea.
Yeah.
Tomorrow I'm going to come and pitch it to you. What do you think is the most common reason that you would reject me and I will never hear afterward?
No. So ideas are worthless. So that's the first thing. So don't pitch me an idea. Pitch me a thing that you've worked on, you know? So, dude, like we see 1,500, 2,000 pitches a year. So it's quite a lot of pitches.
For over a decade.
So 1,500 to 2,000 a year. For the past 3 years since we've been investing out of Plus VC, we've looked at maybe 6,000 deals almost. We've invested in 100. So we do invest like quite actively, but we have such a big universe to choose from. So you really need to show not just an idea, because ideas like don't mean anything. Like show me what you've done about it. So that's the key thing. And we respond to everyone, by the way.
Really?
Yeah, we respond. Like that was one of the things I wanted to avoid, is people were like, "Oh, someone ghosted me," and whatever. So as long as your email is correct when you submit it on our website, you will hear back from us. Everyone hears back from us. The ones that don't hear back from us, and then are like, "You misspelled your own email." Like obviously, I'm like, how's the email gonna come to you? But we've built out our system so that we can make sure that we can respond to every single deal that comes in.
So when you came here, you started 500, you did it for several years, and then you went and started your own Plus VC. What is something that you used to believe about in startups in general, but you no longer believe about it today after starting Plus VC?
It's a tough question.
I noticed that you changed the way that you guys invest. Now you maybe focus on more volume, lower ticket, or no?
No, it was the same. 500's model is the same. So I learned how to invest at 500. So I was a managing partner for 500. I brought them to the region and built a fund. It was 181 deals I did from 2017 to 20. It's the most active investor in the region. So, and some great deals like Calo and Floward, all these sort of deals that we invested in. First checks into those deals.
And you created like one of the big, well, you have a big impact on the ecosystem, by the way.
It was a great,
yes.
It was nice. So now, that was probably a great learning fund, because actually it taught me that actually this way of investing makes sense for our market and our region. It's such a nascent and emerging market. There's so many things that can go wrong. You've got to build a portfolio. You can't just be concentrated in 20 or 30 deals. You have to invest in at least 100 deals in order to make sure that you're going to consistently return money to your investors.
But that's different from the investors in the US.
Yeah, but the U.S. is a much more developed and
Okay.
existing market. It's been around, etc. Here, everything is just still new. It seems like we've been around for a while, but everything's still new. Like we're just getting to maybe the end of one of the life cycles for a lot of these funds. And so, yeah, in order to invest in a market like ours, diversify out the risk, invest in 100 companies.
And what do you think is very unique to Plus VC comparing to other VCs in the region?
I don't know. I guess sometimes
What's your moat?
I guess we're nice. We're comfortable in our decision making, I think, is the main one, right? So we will say yes or no. We won't wait for other people to say yes or no. And so we can lead rounds even if we're sometimes the smallest check, but sometimes that yes gives the founders the ability to roll in a bunch of other people alongside us. So we're happy to say yes and lead rounds even if it's a small check. We like to invest in different things, so we're not just following the trends. So even if it's someone that's like super random investment, we'll probably do. I like it when I'm pitched something that I know nothing about, because that means that, I haven't invested in this thing before. I've invested in so many different things now that if someone pitches me, I've probably not just understood and know the market, I've probably done an investment in that same field like over the past 10 years. And so when someone pitches me something completely new, then I'm like, oh, actually no one else has done that. Yeah, that's interesting. So I think that's really the thing. We like to invest in different weird and wonderful sort of ideas. We're happy to be the first check into a lot of deals. And we're there to support really as much as possible. So I don't know if that's a differentiator or not. You can ask the founders that we've invested in, and they'll probably tell you better.
On that point, today we were like in a similar event, and one lady was pitching to me AI toothbrush with a camera. I thought it was so cool. I was like, yes, this is very, very weird, very new. But what about you? What is like the most bizarre or random thing that startup that you guys recently invested in, if you can speak about publicly?
I mean, we've invested in a lot of different things. Like our portfolio currently ranges everywhere from Lola, which is a cake delivery platform that spun out of Calo, which is doing super well, all the way to like an underwater drone company that does pipeline inspections for Aramco and stuff called Marikustas out of Tunisia. So it's a pretty broad universe of things that we've invested in. It's interesting. Our last deal that we now invested in is a company called Oudlab here in the UAE. Yeah. It's a great founder. I really like him. So I think we're the only investor in that deal now.
Can you check my audience? What is Oudlab?
So Oudlab he's built this mubkhar for oud completely by himself, 3D printed at home, got the things, was assembling all these pieces themselves, has a massive following on social media. And the mubkhar is basically doing like the Nespresso model where you buy the mubkhar, and it's a really nice one. And then there's pellets that you put in to get the thing. So that's our last deal out of our first fund, which is also really cool. So we'll invest in lots of different things.
But usually investors, they want to invest in stuff that have like 10x. When I see those, for me, I don't look like 10x opportunities. Or I'm wrong.
Did Calo look like a 10x opportunity?
No, neither did Floward as well.
I'm doing 57x on that one. So yeah, it doesn't matter what I think.
Mic drop.
Doesn't matter what I think. As long as the founders can execute and do something, they'll be able to build a great company.
What do you think is the belief about the MENA startup ecosystem that you see everyone repeats, but you think that they're wrong?
The belief about the ecosystem?
Yes.
I don't know. I think that some people think that there's a lot of money here in our ecosystem, but honestly, there isn't. When you look at the total amount of funding that took place in MENA last year was what, $3 billion, $4 billion? Yeah. The US was how much? 300 and something $billion. When you look at like small markets in Europe, like Holland or whatever, they probably are the same size total funding as our whole ecosystem in our region. So no, we don't have enough funding in our region. And a lot of people come in from outside and they're like, we're going to raise from MENA. I was like, you have better luck raising in your own market. Like,
Yeah, this is a great point. Now there's a lot of. Do you feel fishy when there's like really good founders come from the US to raise money here in the region?
always.
There's a lot of them now.
No. So my first red flag is, why the hell are you coming here? Like, there's 400 funds in Silicon Valley alone. There's probably 1,000 now. Actually, there's a bunch of funds in Silicon Valley. If all of them have turned you down, and you're coming here because we're dumb Arabs and it was with streets lined with gold, I'm obviously going to be really suspicious and not invest in anything like that. So, yeah, we don't do those.
Do you think there's anything that's fundamentally broken in our MENA startup ecosystem, or no, not really?
I think the way that the VC universe is being funded is probably broken. So when you look at the way that the ecosystems in other markets are funded, it's usually endowments, private sector investors, family offices are super active as LPs in VC funds. But you don't really see that here. The majority of the LPs that are investing in the MENA ecosystem are government-linked entities, which is fine. But each of them has these restrictions about where you can put their money, which countries you can invest in, and all these sort of things. So the way that the funding ecosystem for venture capital in our region has come up is weird. Like, it's not really the most efficient way for the ecosystem to continue to expand and grow, because the way the ecosystem should be growing is people should be looking at it as like, actually, that's a great place for me to invest. Let me invest. But we're not seeing that from pension funds. We're not seeing that from endowments. Even family offices, they'll invest in a direct deal, but they won't put money into a venture capital fund. And so that's the thing that I think is kind of broken in our region, is the incentives and the alignment of LPs and funds is not purely financially motivated, and there just isn't enough LPs in our region for that. For our region, like, the regional LPs will invest globally, but
this is what we're gonna say. So, do you think that maybe once we have our first wave of founders and they exit, and then we might have those as an LPs, or this is no? Or do you think that maybe we need more sovereign wealth funds to actually become LPs?
I think it's more like the institutions need to be LPs. So when you look at the ecosystem in the US, a lot of it is university endowments, pension funds, investment advisors. So people that are financially motivated are typically the biggest investors in venture capital as an asset class. Those aren't active in our region as much, in our asset class. A lot of them are like, the funds are too small in the region. Yeah, obviously, because they haven't had a chance to grow yet. So you gotta give them a little bit of a chance to grow. So that's basically the thing.
I spoke with one big sovereign wealth fund in Abu Dhabi, and they mentioned, like, Mahmoud, the market is not big for us to invest. Like, we don't want to invest 10 million, we want to invest 500 million. That's why we go to the US and want to invest in the US. Even one of them invested in Uber, Kareem competitor, which doesn't make sense at the time.
So I think the thing is that, yeah, it makes sense for them from their allocation perspective, but from a regional perspective, they probably need to start investing early and then help those funds to grow to size where they can then maybe in 6 years or 9 years, after 2 fund cycles or 3 fund cycles, can then reach a level where they can deploy a larger check into that. But it shouldn't be the majority of their investments anyway. Obviously, they're going to invest in bigger areas, but I mean, the region is kind of overlooked.
But what I agree with you, but again, just to challenge this argument, so when you look at the Arab countries, they're not like, there are several Arab countries, there are several markets, there's several regulatory environments. It's not one big market like the US. US is very homogeneous. So still we have a lot of challenges here. We have the currency, sometimes there's big inflation. There's a big problem that we have. That's why maybe it's not a big market for them to invest. No infrastructure. I mean, only 10 years we still have infrastructure for e-commerce.
If you don't invest, it'll never get there, right?
Chicken or egg problem?
Chicken or egg. So if no one had invested in any real estate in the UAE, where would we be? Would real estate in the UAE be at the position where it's at? No, you've got to have the first believers, and you've got to find ways to motivate more people to invest. Like, we have Mubadala as one of our investors, and they've been really amazing to work with. And so there are big funds like them that are coming down and deploying into smaller assets like ours. So it's not a question of, can they do it? It's like, do they want to do it? Are they going to do it or not? And so, yeah, it's one of those things I've been thinking about quite a lot. But I think the ecosystem's at that stage where it needs to be nurtured. We don't Like if any fund in the region needs to raise $100 million fund, it's super difficult to raise it from regional LPs. So how are we ever going to get to the $500 million, $300 million fund sizes if we can't even get to that size?
Let me tell you another thing I'm thinking about. I had a quick conversation with Brett Feld from Techstars.
Yeah.
And he's a big on a great book, Startup Nation. I forgot the name of those books. I'll include the link to it here. He's a big on let the founders, they're the one who lead the ecosystem.
Yeah.
But here in Dubai, it's a bit different where the government actually led the ecosystem and it's actually working out really well.
But that's the thing. Even in the US, the government did kind of support the ecosystem. The initial investments in Silicon Valley were done through the Department of Defense.
Okay.
So DARPA was one of the key investors in a lot of the innovations that came out of Silicon Valley. Then after that, basically SBIC, the small business sort of institute that they have in the US, that started to invest in venture capital funds. So those were the first institutional investors, was government backed into VC, what became VC funds after that. After that, then the government in the US released laws that allowed endowments and pension funds to invest in risky assets like venture capital, whereas before they weren't able to. So every step of the way of the development of the US ecosystem was government sort of driven, probably not on purpose, but essentially that's kind of what happened. And so when you look at each from, the beginning of Fairchild and all of the things that happened in Silicon Valley to where we are today, a lot of the developments that triggered changes in the ecosystem for venture capital were government-related innovations or introductions that they did.
Let's say you're a policymaker, choose any country. What do you think is one of the fastest way to really have this ecosystem? The reason why I'm asking this is because a lot of my friends ask me like, Mahmoud, why there's a lot of good entrepreneur Jordanians? I was like, guys, because they have like Ministry of Entrepreneurship. They spend so many things. They have really good programs. What do you think is a good program? Because capital is not just enough.
I mean, Jordan is an interesting story. That was the first ecosystem to emerge in the region.
Jordan.
Yeah.
Lebanon, we have Circular 331, I think.
Circular 331 was fun to see that, but not
lasted a few years.
Not the best example because there's a lot of things that were wrong with it. I think the thing that you have to be very cautious of is not to sort of distort the market too much. So you don't want too much money flooding in. Things go wrong if that happens. So you need to make sure that there's money flooding in, but the ecosystem in terms of founders and deals is also growing at kind of the same pace. And so that's one of the things you have to be cautious of. In Lebanon, that was kind of the thing. We saw a lot of money coming in from Circular, but we weren't seeing the ecosystem in terms of the number of startups. It was not increasing at the same rate. But Jordan was really interesting because Jordan had a history of tech entrepreneurs. And then recently, it was after the Maktub acquisition, Maktub got acquired by Yahoo. That's when the ecosystem really started to pick off in Jordan. That was the first ecosystem in the region to really become like with startups and founders and angel investors and VCs started to come out of that market. It was interesting, but then everyone else started caught up. Egypt leapfrogged, and then the UAE, and then everyone else started to play a role at that stage.
They did something very interesting because I studied the ecosystem very carefully. The government have money. They didn't go out and chose winners. They told the other funds, "Hey guys, we invest in your funds, but can you guys choose winners for us?"
Exactly. The government should never be in a position to invest directly into deals, because there's so many reasons why they shouldn't be doing that.
They should not pick favorites.
But the government can support the development of a funding ecosystem that then invests in deals directly. So that's probably the way to do it.
So, but which sector you're like most excited about today? Which sectors do you think that investors are chasing for the wrong reasons?
I think, AI is one of the things that people are chasing after. I don't know if it's for the wrong reasons, but everyone thinks that every AI deal is going to be the same as OpenAI or Anthropic, but that's not really going to be the case. There'll be a few big winners, and we're kind of already seeing which ones those are. And the rest of them are probably going to lose hundreds of millions of dollars. So try not to chase trends is my whole thesis in life. It's like, so we try to really just look at finding great founders, building things, and eventually sometimes the trends follow them. Like that's an interesting thing.
But you don't have like a domain or a sector that you're personally interested in. To me personally, because I was trying to do an event and I was looking for agri-tech in the region. We don't have much.
Not a lot of agri-tech. We did one or two, but agri-tech is tough.
It's much needed, especially in our region. What's happening in the political region as well.
It's super difficult because you go to the farmers, they don't have money to pay you for anything, so they're not really a very good customer. And then you go to the big farms, like the mega farms in places that they're not interested in modernizing. They're fine to continue the way they are, or like the sales process is ridiculous. So ag tech is really difficult in our region and in most markets, actually. You saw all of these vertical farm startups that raised billions of dollars all failed in the US. So like it's really interesting things. But I like to invest in new and different and weird things and things that I haven't come across. And so that's kind of what I'm looking for. And so I can't tell you what it is because I haven't come across it. So, I'll see.
You spoke a little bit about AI. Everybody's building AI companies today. And how do you distinguish between like a real AI business idea and or like an AI feature which is wrapped in a pitch deck?
It doesn't matter. So the thing that really matters is still the same thing that mattered anytime we were looking at any deal. Do they have the ability to execute and find their customers? That's the main thing. Can they sell? Can they acquire users? Can they do it? Because you can have the most beautiful product in the world, whether it's AI or not, doesn't really matter. But can you get people to start using it and paying you for it? So that's still what we look for. And so, yeah, that's kind of like with the AI thing. It's kind of table stakes. Every startup that we're seeing now has AI somewhere in it. So you can't just pitch yourself as an AI startup anymore. It's like, whatever, like no big deal. But it's like, oh, I'm using AI to solve this specific problem for this massive group of users. And a bunch of them have already started using us. So this is what we're doing. And then I know how to continue to scale and get a lot more of these customers similar to these users in this specific space that AI is allowing us to solve. And so, yeah, we invest in a bunch of AI deals. We've invested in a company in Saudi that's using AI for law, which is quite interesting, called Calo and Floward. We've done deals like Stratify, which is doing it's geothermal cooling for data centers. That's also related to AI. So there's a bunch of things that we're doing in AI. We did another one called Governata as well recently. So there's a lot of startups that are just using AI in different ways, but the key differentiator is always going to be, can you acquire the customers and users?
So there's a question that I ask my friends and family and colleagues, what's your favorite product or tech product? Usually it's Apple products, Netflix, etc. Then I ask them, what is your favorite Arabic product from the region? Maybe they mention one or two. What do you think that would need to happen for us in the Middle East to create a globally dominant technology company?
I think we already have a bunch of those that are starting to emerge from our region. I don't know if we needed to be globally dominant technology companies. I think if we have a tech company that's dominant across the region, they'll still be worth a couple of $1 billion. If they're able to expand into places like Europe or maybe Asia as well, that's great. Going head to head in the US is a little difficult, but there are a bunch of founders that started in the region and moved to Silicon Valley and built great companies there as well. So I don't think there's anything really holding you back. It's just, is that your mindset from day one or not? And most of the time, I don't think you need to. So like, what is it you really, like as a founder, why are you actually doing the thing that you're doing, right? You're doing because you see a need that's not fulfilled. You see a problem that you can solve. And usually those problems and those needs are things that are in your life or you've come across in your lifetime. And so you're solving something for yourself, and there's a bunch of other people that need that solution the same way that you've needed it. And so those things are much easier to find here than in developed markets like the US. In order for you to generate a return in the US, like build a great company, you have to find either be at the forefront at the frontier of technologies or go into niches of niches of niches in order to find something that's not been covered by the big players. But here in the region, we don't really have a lot of those big players. So everything is kind of like fresh grass for you to go and mow. It's like great fertile ground for you to plant whatever you want and start building a real company, because the opportunities here are much more interesting than the ones that you need to go and dig for in more developed markets because they're surface layer opportunities.
That's such a great point. I meet a lot of friends. They start reading Zero to One by Peter Thiel, and they're like, Mahmoud, we need to create monopoly. We need to conquer. We need to. I was like, yeah. Here in the region is very different. Building in Silicon Valley is different than building here in the region.
Yeah, here, like, dude, like, okay, you look at the Irish-speaking world, it's like 350, 400 million people. That's great. That's a big enough market. It's the same size as the US. Sure, it's a bunch of different countries. You got to figure out how to do it. But that's an obstacle that any good founder is going to figure their way around, right? And so it's a big enough market. It's a young population. It's in some areas like food delivery, we're amongst the highest consumers and revenue per user in the world. And so there's a lot of opportunities here that just haven't been tapped. And so find those. And so that's the thing. Like when you're really trying to build something, you're usually doing that mindset is like, I'm building something that I know and that I understand that I can scale and grow. And I believe that I'm solving a big problem. And those problems can be big enough just solving it for our region and our market. It doesn't have to be a global business for you to be able to like Kareem's not a global business, but look at it. It's a success story for us, right? So yeah, that's kind of my mindset in all of this. It's like, I don't need you to go to the US. Just build something big here. When you ask you that question from your family members and your friends and stuff like that about, you know, which startups are from the region, I'm sure they've used Kareem.
Kareem is always the top of the list.
I'm sure they might have used Talabat, they might have used Noon, they might have used Calo or Floward. Or there's a bunch of companies out there that they've used, and they don't really think about them as regional companies sometimes even. But they've used them.
And now Weo, shout out my friends at Weo.
Yeah.
It's a banking app, fintech. But what do you think is one of the most painful investment lesson you've learned?
Painful investment lessons. Yeah, I think it's just that I don't know. What's a painful investment lesson? I guess things don't always work out the way you want them to is probably the main one. I think one lesson is that, you know, even if a startup gets a Series B, it doesn't necessarily mean that's going to be a success. So like
Series B is not a success in our region.
No, we've had a few of those go to. So anyway,
you guys exit on 200, 300 million, correct?
Yeah.
Okay.
So that's because of that lesson. So now when one of our deals gets like 10x or like $200-300 million valuation, I start selling secondaries. Not my whole position, but I'll start taking profit off at that stage because you never know what's going to happen. So even after startups raise tens of millions of dollars or whatever, it doesn't necessarily mean it's a success yet.
So you don't prefer to ride it or double down until it becomes a unicorn?
I mean, I'm okay. It gets to $200 million. I'll be, if I'm doing 10x, 20x, I'm okay.
I thought VCs, you have to be greedy. Hasan,
I am. But the thing is, I am. Like, I'll sell 20%. I won't sell all of my position. Okay. I'll take some money off the table each round after that. So it's hedging my bets at that stage. And yeah, I am greedy in most of the situations, but like there's things that can go wrong. So if you have an opportunity to sell and it hits these milestones, then we'll start selling a little bit.
Let me ask a question that my VC friends hate. Which is like the best company you guys ever rejected?
Best company that
you have a wall of shame? Deals that you said no and turns out to be really good?
No, not really.
Okay.
I'm really comfortable in like my decision making. Like I never regret any of the deals that I said no to or the ones that I did, because the ones I said no to, there's probably a really good reason. Like most of the time it's like the valuation just didn't make sense. And so I was like, okay, I could have done that deal and I might have made some money, but like it would have fallen out of my mindset of like, actually it just didn't make sense to me. And so I don't think there's been a deal that made sense, ticked all the boxes, the right valuation, that we passed on and then went on to be successful. Most of the ones that we passed on that went on to be successful probably fell afoul of like probably the valuation more than anything else. Like entry valuation just didn't make sense to me. I'm sensitive to valuation. That's my thing. And so yeah, I'm pretty comfortable.
Really? So you never have a company that came and you said no, and then it raised like a lot of money, and you were like, oh God, we should have. Okay.
But I never think, oh God, we should have.
Oh, okay.
Yeah. Comfortable. Gotta be comfortable in your decision making. That's the thing.
I want to ask you, what do you think is a milestone that once we make it in the MENA startup ecosystem, we think that we truly have matured? To give an example, the milestone that I thought is when Karim got acquired by Uber.
Yeah.
And I was like, everyone was saying, oh, what's happening here? What's happening? And people start looking at us. Do you think this was the thing that put us on the map, or no? Do you think that we still have another milestone that we need to reach for us to be mature?
I think we need a bunch of those.
Bunch of those.
I think we need a couple. So we have a few. We've got like 3, 4 that are there. There's a bunch that are cooking as potential IPOs in the next year or two. That'll be an interesting thing to look into. Yeah, it's about consistently seeing companies that are getting to that stage and growing and exiting and stuff like that. We don't have that consistency yet as an ecosystem.
Imagine you're 25 years old, living in Dubai, talent, ambition, and you have like $20,000 in saving. What would you build today and why? If there's any specific problem that really irks you, you would wish any founder to go and solve it?
That's such a tough question. No.
I'm gonna delete the question. It's fine.
Yeah, no, I don't think like
because I get this a lot. So I speak with a lot of universities, and they will come to me and say, Mahmoud, what do you think that I should build today? What do you think that I should
I
build
don't
today?
freaking know.
Exactly. I was like, don't go learn AI. This is like usually my default answer.
No, I don't know. Like, honestly, I don't know. Go find a problem, solve it, and show me that there's a problem there. And it's great. Like, but these aren't like, you can't be spoon-fed a problem to solve. It has to come, because the thing is, startup is one of the hardest things you're going to do in your life. And there are going to be points in time where things are going to go like to shit. And you're going to be like, what the hell am I doing this for? And in most situations, if you don't have that passion, the drive, the determination, and that belief in the idea that you're working on, you're going to give up and you're going to go and get a job and be like anyone else. So if you don't really believe in what it is that you're trying to build, you're not going to be able to come out of that difficult point and go towards the success of whatever it is you're trying to build. So that motivation, that determination, that like drive and passion only really comes when you are the one that really believes in that idea, not the idea has been given to you. And so I don't have any ideas because I'm a VC. We don't come up with ideas. We find great people that have great ideas and we support them, but I don't have any ideas. I don't ever want to be a founder again. That was not my thing. Like
Hasan, your honesty is very, very refreshing, because one of the memes that we have in the region, that we have VCs that they don't really have experience in this domain, but they take a board seat and they tell the founders, hey, you need to do this, you need to do this. And then eventually when the thing failed, they're like, you listen to me. Is that my problem? But you're a very, ferocious reader as well. Do you have any like book recommendation that, let's say I'm an entrepreneur, I'm an early stage founder, think that you would help, that we would recommend to people?
I think there's a lot of books out there that are really helpful to you to read. For me, when I was starting on all of this, I started reading all of Paul Graham's essays before YC was a big thing, and those essays are really, really great. And now there's like so many books out there about VCs, and I guess the lean startup method, a bunch of all these sort of things are pretty useful for you to read. And I think there's so much out there that the more you read, the more you understand about what's happening in the world, the better it is for you. So like, when we have analysts come in, I tell them the best thing you can do to be a VC, you need to have 2 really great skills. One is you need to read a lot about everything so that you have a broad understanding of lots of different things around the world. So reading is probably a superpower that a lot of people don't have anymore in this world. So if you can read, then you're already ahead of most. And the second one is you need to be really good at gossiping. It's super weird.
What does that mean?
So founders, as a VC, it's not an open market where we can go and find exactly what's going on in the market. There's no public sources of information. So you've got to be really good at networking, and you've got to be really good at essentially learning what's going on in a closed market, which is essentially gossip. So those are the 2 skills that if you want to get into VC, you've got to be really good at.
I love how you ordered it perfectly. So where can we go? My audience, we have a lot of people here in the Middle East. If they have like an idea, first they have to go and actually prove that I did something, get any early traction or proof that actually they have something and they want to pitch to you? Where is the best way to need to go and pitch?
So basically, your website is there. So unlike in a lot of other VCs or other markets where they're like, oh, we only take referrals, take a referral into us. We don't. I wanted to democratize the access to us. So anyone who applies to the website within a week or two max will get a response, either to schedule a call or it's a rejection. So everyone will get a response.
That's a lot of volume. How do you guys deal with it?
We have systems in place.
Do you guys use AI to read all of this, or
No. It's our industry is a human industry, so we need to make sure that we're reading and paying attention, and giving everyone a chance as much as possible. So even if someone reaches out to me by email or whatever, or even a recommendation, I'll take the call, but then I'll tell them to apply through the website, because nothing like we need to make sure that we're systemized. Otherwise, things will move. Like we'll miss things through the cracks. And so that's what we do. Everyone who wants any funding from us, apply through the site, and we look at everyone and we respond to everyone. And I think that was one of the things that I wanted to make sure we did as a firm, because I don't want things stuck in my email inbox. Like it's not super efficient, is it? Like how am I gonna dig through that, and how am I gonna respond to everyone? Like it doesn't work. So everyone apply through the website, and then we will respond to everyone. Like that's kind of our thing. And yeah, happy to look at anything basically.
Awesome. I'll include that website in the link. Thank you so much.
Great. Thanks for having me.